GM soldiers, in today's video I'm going to make an in-depth tutorial explaining liquidation heatmaps. How to use liquidation heatmaps to apply them into your trading strategy, what are liquidation heatmaps, and how can you use the concept of liquidation heatmap to take profit from the market and apply them into your trading strategy. And in the end of this video I will share with you my personal experience with liquidation heatmaps. Okay, and I will tell you the success rate that I've seen all over the years that I'm trading with these liquidation heatmaps. And also I will explain you all the platforms that you can use to see the liquidation heatmaps and to apply them into your trading strategy. Okay, so first of all, what are liquidation heatmaps? Liquidation heatmaps, basically what they try to do is to predict, because they use, for example, volumes, open interest and CVDs, and they try to predict with these different kinds of metrics where the 25x, 50x or 100x short and long liquidations are clustered in the chart. Okay, so basically these indicators or these heatmaps, they try also, for example here CoinGlass makes an explanation of how they are made these calculations to calculate these liquidation heatmaps and these levels. Okay, basically, as I said before, is just an approximative or an estimate on where the 25x, 50x and 100x and also 10x liquidation levels are clustered around on the chart. So you will tell me, okay, now I have this information. I know where the 10x, the 50x, the 25x and 100x leverage traders have the liquidation levels. How can this benefit to me into my trading strategy? So you can benefit from this in many ways. Usually these 25x, 50x, 100x and 10x liquidation levels coincide with supply and demand areas or support and resistance areas in the chart. So this causes confluence. So if, for example, I remove this indicator here and I'm going with naked eye to highlight what I know, reading the price action, what are the supply and demand or support and resistance areas. For example, I can see here that here is a clear support area, here is a clear resistance area. Okay, let me try. Here also another support. Okay, here another support that coincides with the previous resistance. Okay, so I can expect that below and above support and resistance areas a lot of stop losses and liquidations are clustered there, because traders oftentimes when they see a swing high they put open short positions and they put their stop losses above, in this case, if you are short, the last swing high. So this coincides with the resistance level, and then here is your stop loss. So if you didn't close the position here and you are waiting to the price to go lower and you have still the position open, this stop loss creates liquidity in the market, because it's an order that is waiting there to be executed. So if the price does a short squeeze, this will cause forced liquidations around these levels of the 25x, 50x and 100x leverage traders. And also in the opposite side, you have here, for example, the support. Okay, and usually what happened here, that we got a swing low. Okay, here for example the market reversed, makes a swing low, traders position long and they put their stop loss below the last swing low. Okay, and what does the price reverses and liquidates them. Okay, here the traders that enter long waiting for a new all-time high on Bitcoin, if they didn't close the position here after this move up, the price, when retested this area, liquidates them, forced to close the position because the stop loss got hit or they got liquidated. Okay, so you can expect that, as I said before, liquidation levels oftentimes coincide with support and resistance, supply and demand areas. So they highlight in the chart high probability areas where the price may go there and try to retest these levels. The price, oftentimes we say that the price is attracted to liquidity. Liquidity acts as a magnet to the price. And in some part is true, in some part is not true, because price likes to retest high demand and high supply areas and support and resistance areas. And when it goes there, if the volume and the momentum is enough, strong enough to break the resistance and to break the support, it will have a bullish continuation or a bearish continuation. Okay, so price, yeah, we can say that it's attracted to liquidity, but liquidity, as I said in many other videos, is created by limit orders and stop losses that are clustered around an area. And oftentimes, as I said before, these areas are have confluence with support resistance or high supply and demand areas. So now that we know that we can use these liquidation levels, the theory of this concept is to use these liquidation levels, these high liquidity areas, these levels that the chart highlights here as high liquidity or high liquidations, as support and resistance. This is the basic concept, okay? But as I said before, you can identify also these levels just using price action, okay? If you are a beginner, or for you it's easier to identify these levels with indicators, okay? For example, here in TradingView, I explained in one previous video that I will leave the link here in the top right of this video for you to go and see how to use this indicator on TradingView. This indicator is called Leviathan Liquidation Levels by Leviathan. Okay, you can search here in the indicators tab on TradingView, Leviathan, and you will find here Liquidation Levels by Leviathan Capital. This one now has 6,000 almost people that is using it, and here it has a in-depth explanation on how it works. As I said before, it uses the open interest, the volume, and the CVDs to calculate the approximate liquidation levels of high leverage traders. Okay, so here is the indicator loaded into the chart. You have here many settings that you can customize. For example, I like it to use volume as the main source of data, not open interest or open interest plus vol or CVD or anything. I like to use the volume. I like to use the close. Okay, directional bias for liquidity levels off. Directional bias. These are my settings. Copy them. I also like to have enabled the liquidation bubbles, because the bigger the bubble, it tells me the level, the magnitude of the liquidations that had place around this level. Okay, and also I like to enable the hide field levels, because if I have it enabled, it shows also the past levels. Okay, and if I enable this option, I see the future levels where the price will go. Okay. Then here you can change the colors of the 25x liquidations, the 50x and the 100x. But as I said before, this is not the main purpose of this video. You can go into my channel and I have one video that is explaining this indicator, liquidation levels by Leviathan Capital. You can search it in my channel and you will have an in-depth tutorial showing you how to use this indicator. This is just to show you that you can see liquidation levels in TradingView without the need to use Hyblock, because it's another, for example, payment platform that you can see liquidation levels. But you, for example, you can use CoinGlass. Okay, you can use, for example, here Coinank. You can use Trading Different. Okay, these are free liquidation heat maps, and as you can see here, you can see perfectly the same things in the same platform, because also the levels, if they are calculated correctly and by the same procedure, you will see the same levels. Okay, so if I had to use it, I prefer to use price action. This is my opinion, because I like to read price action. I know how to read price action, and I have experience in the market to know how to read price action. But it's up to you to use this indicator by Leviathan Capital. and to see the liquidation levels. Or if you prefer, you can use CoinGlass. This is completely for free. You just need to go to Google and search for Liquidation Heatmap CoinGlass, these 3 keywords, and it will pop up. This exact chart is completely free. I'm not subscribed, I'm not logged in. Okay, you can see that I'm logged out of CoinGlass, so I'm not a client from CoinGlass. And also the same from Coinank and from Trading Different. Okay, you can use these 3 platforms, and on top of that, I give you this TradingView indicator if you want to use just TradingView, as I like to do, and use the Leviathan liquidation levels, okay, indicator. There are many other indicators that in theory highlight liquidation levels in TradingView. Okay, if you here search liquidation levels, you can see here the one from Laxalgo, okay, that mostly do the same things, okay, but from what I've seen, the Leviathan one has more features to customize, okay, because here, for example, the Laxalgo, you see here Laxalgo liquidation levels, you have very little features, very little settings to customize, okay. In the other hand, if you switch off this from Laxalgo and you go from the one from Leviathan that I explained you before, you have a lot of features and a lot of settings to personalize and to customize this indicator to your needs, okay? And this obviously gives you an edge, because if you know how to do the settings on this indicator, you will have better results than other traders that are using the same base indicator with the same settings. And in the end, if you know, many times the market does the opposite what the majority of the traders are expecting to happen, okay? So for you, if you find an edge in an indicator, is by customizing the settings of this indicator and to backtesting and to testing this indicator in a systematic way, okay? So now that I explained you what are the concept or the theory of liquidation levels, how they work as support and resistance or supply and demand areas. So it comes back to the same simple concept of price action and support and resistance always, okay? What is my opinion and what is the success rate of these indicators that you can see here, okay? First of all, my opinion, as you should already know by what I talk in this video and what I explain in this video, why you need an indicator to tell you something that you can see in a simple manner, just understanding price action. And if you are an experienced trader enough and you have skin in the game and hours in front of the charts and you are trading from a little while, you are not a beginner trader, you will know that what I'm telling you is the truth. In the end, what matters is not an indicator, it's just the price action, and the volume. Because the price is giving you the movement, the waves, the swing lows, the swing highs. The candles are telling you a story of the momentum that they have. And if you know how to read simple price action, okay, a naked chart, you remove all indicators and you just see price action, okay? You see the candles, you see the weak rejections, and then you highlight with lines support resistance levels, as I did in the beginning of the video, okay? You identify these support resistance levels, and you can expect that these levels are high liquidity areas where the price is likely to bounce from there and be attracted to there, or pierce to liquidate and then turn back into the same value area, or to try to retest the other support and resistance or supply and demand area. So in my opinion, invest your time in learning how to read price action, and also in how to read the volumes in correlation with price action, because the candles tells you the momentum that they have, but also you have the volume, you can see the force, the actual push that the market got in every candle, okay? So in my opinion, if you want to master something, focus on master price action and volume, and the harmony or divergence between price action and volume, and then switch on to understanding or to using indicators. Because as I said before, if you see the liquidation levels indicator by Leviathan, what are the sources of data that he is using to calculate this indicator? Is the volume, the CVD, the open interest, and all these three metrics are a derivative from the price. The open interest not, but because the open interest is the number of outstanding contracts that are open in a given market in a given time, but the volume, the CVDs, are a derivative of the price. So the base of all this is the price. And when you buy or you sell an asset, you are buying and selling this asset at a given price, not at a given volume or because an indicator is giving you a signal. So in my opinion, you need to invest your time into mastering price action as a trader, and also seeing the correlation, the harmony or divergence with price action and volume. And you will be long-term a better trader rather than investing your time into finding the next platform that is showing you the next indicator with liquidations and everything, okay? Why I tell you this? You will tell me, okay, Soldier, why then a lot of experienced quote-unquote traders publish on Twitter or on YouTube these charts, these heat map charts, okay? Why they publish this kind of charts? And you can find these charts all the way around from Twitter, on YouTube, and many other platforms. And many influencers or people that is posting content about crypto and trading use these indicators to post them. And you will ask me, okay, Soldier, if you think or you tell us that the important thing here is to learn price action and volume, why many people is using these heat maps? First of all, for engagement purposes. For engagement purposes, I mean to attract followers or to spike conversations into their comments. Because as you can say, a heat map is very graphical and it catches a lot your eye, okay? When you are scrolling down your app, okay, on Instagram or YouTube or Twitter, you see this kind of chart, and if you are a beginner, you see, oh, this guy knows something that I don't know. This guy is not using a normal chart, he's using a heat map. Oh my god, a heat map. These big buzzwords. What, in the end, as I explained you in the beginning of the video, a heat map is just a way to estimate where is a support or resistance area. And you can identify the same thing just reading the price action. So a lot of people uses this kind of heat maps to identify, to use these, highlighted charts with these cool colors to catch your eye, to think that they know something that you don't know and they are more experienced than you, so you can follow them and they can create an audience based on you. This is the true story. And also these platforms that sell this kind of, there is another that is called Hyblock that sells these heat maps, okay, and they cost money. And they sell these services, but you can use just a simple trading view chart without any indicator and do the same that they are doing for free, just with your knowledge and knowing how to read price action and identifying support and resistance, supply and demand areas. You can find in my channel, in my YouTube channel here, a lot of videos where I am explaining how to identify support and resistance, supply and demand areas, and how to trade based on supply and demand and support and resistance. And it's completely for free. You don't need to pay monthly fees. Like here, for example, Hyblock is making you pay to use you can use it for free, but you can use, here, $69 a month, okay? It's a business for the platforms that sell the liquidation heat maps and other services, and a business for the influencers that want to create a following based on this. And to finish the video, I want to tell you what is my experience of the success rate on this kind of heat maps. So, this is correlated with the point of the influencers and the social media. If an influencer is telling you, or a lot of influencers or big accounts on Twitter or on YouTube are posting the same heat map over and over again across all the platforms, and all the retail traders that follow them are seeing the same chart, and for example they say, okay, now we are here and we are finding support, and I don't know, I'm going to make something up right now, okay? We see that a lot of liquidity is clustering around $54,000. You can see here that a lot of liquidity is clustering here, okay? We can expect a pullback. Okay, what the retail traders do? Okay, for example, in this case, they position short because they expect a pullback. So, if a lot of people position short because all the influencers are telling that maybe a pullback because of on this heat map, there is a lot of liquidity in 54K area on Bitcoin, they are making you think in a bearish way. So you are getting bearish bias, you are positioning yourself short, or you are selling your coins, and what you are creating, if you position short, is creating liquidity, new liquidity around the last swing high. And also, if we apply the law of the contrary sentiment here, usually the market does the opposite of what the majority of the traders or the market participants are expecting. So if you see the same chart over and over again, the same heat map over and over again being published on Twitter or on YouTube or on other platforms, you can assume that this information, this data, doesn't have an edge for you, because already a lot of people, a lot of traders, a lot of market participants had seen the same chart as you are seeing right now, and they had taken positions based on this piece of data, on this heat map that big accounts or influencers are publishing into their social media. So the most intelligent thing for you is to do the opposite of what these people is doing, because this data is old, doesn't have an age. And also when an influencer or big account, as I said before, publish this heat map here and says, okay, there is a lot of liquidations above $61,500, okay? And they say, okay, bears are going to get wrecked here. They position long, they create near liquidity here, and then the market pullbacks, and then goes to the initial target, okay? So in my opinion, I can tell you, I never backtested this kind of heat maps. I don't trade based on liquidation heat maps, okay? I use them many times as a confirmation bias. Many times I also try to gather some kind of followers by posting the same heat map, okay? Or if I see a heat map that is relevant to me. But in the post that I make, I tell this will act as support, this will act as resistance. The price is likely to go there. I don't tell, oh, bears are going to get wrecked, and I try to influence you or to make a bias on you. No. I tell you, the probability is on the side of the bears, the probability is on the side of the longs. And obviously, I'm also in the social media. I'm also want to create a community of traders, but in the good way. I want to tell the most accurate and precise information that I can tell you, because what's the point on giving away information that doesn't have an edge? Okay, if I publish a heat map that has a support level or a resistance level that is for me important to highlight, I can do it in a boring, simple trading view chart that will have 100 views, okay, and no one will take into account this information because they see a black and white chart as I trade with white lines and black background, okay, and no one will see it, and it will have half or a fourth of the engagement that if I publish a heat map that catches more your eye. I'm telling you the same information presented in a different way. but the message, that is what I want to tell you, goes through. Okay, so that's why I publish sometimes heat maps, okay, but not to make these engagement farming accounts. So going back into the success rate, I doesn't backtest these heat maps. I use them, as I said before, as a confirmation metric or as a confluence metric, but I use mostly support resistance, supply and demand, and volumes. Just this. I use other indicators to help me to give me confirmation or confluence of my initial bias based on price action and volume. But for my experience, these heat maps has a very low success rate because of the concept that I told you before. If a big account or a big YouTube channel or a big Twitter account or a big influencer is publishing a heat map and this tweet got 1 million views or 7,000 views, okay, a lot of people has already seen this, the same chart. Thus, I think and I know that this chart no longer have an edge for you as a trader, because this information is already old and is already being used and is already changed, because the time that the influencer published the heat map and the people that follow him takes position based on the bias that the influencer wants to lead their followers, these liquidity heat maps change automatically, because the positions in the market, the positioning in the market change, because the people is taking positions based on this post that the big account is posting. Simple. So I will not rely my trading system and my money and my time into getting deep on liquidation heat maps. I will not pay to use platforms that sell liquidation heat maps myself. You can do whatever you want. As I said before in the beginning of the video, I will use my time, that is the most precious time, that the most precious thing that I have, okay, the most valuable thing that I have, into learning the base and the principles of price action, volume, and the correlation between price action and volume, momentum trading, okay. This is very important. It's the base, because the indicators are a derivative. The liquidation heat maps are a derivative of the price, of the volume, of the open interest, of the basic concepts on trading. So invest your time into learning the base concepts that are the most powerful concepts, and don't try to find the next indicator that will make you $1,000 a day, as every other influencer is trying to sell you, okay? Learn the basics, stick with the basics, and once you are profitable with the basics, you can add confirmation bias indicators on top, but very selective ones. I have a lot of indicators that I publish on my channel that are very selected, very useful for you to complement with your price action trading strategy. So this video is a longer video because I talk a lot, but I also think that I give to you a lot of alpha. I show you how to use liquidation heat maps, what are they, how can you implement them into your trading strategy, applying this concept as support and resistance, supply and demand areas, okay? And also I told you my experience and my opinion about them, based on 6 years into the crypto market, trading almost every week straight from 6 years, okay? I can tell you that no liquidation heat map made me any money. Weak rejections and support resistance and supply and demand levels made me money. Breaks of structure made me money. No heat map, no liquidation heat map made me money in 6 years, okay? So as I always said, if you like the video or you have any questions that you want to make me, leave me a comment. on these comment sections of this channel, and I will be glad to answer you the best as I can to solve your questions. And if you publish this comment publicly, also the community that follows me will benefit from your insights or your questions, and also from my answer, okay? Because maybe the same question that you have, another guy or another girl that is trading and is trying to learn about liquidation heatmaps, she or he has the same question that you, and if you publish this question here, they can benefit from my answer, okay? And also, if you are not following me on Twitter or X, you are missing out, because every day I publish my trading setups, my trading entries and exits, and also my trading ideas for free there, okay? And from now, I'm a little account, okay? I'm almost 1,100 followers, okay? So I'm very little account in the CT space. So now I can't influence the market if I tweet something. And I think that you can find a lot of edge in my crypto Twitter or X account, because I cannot influence the market, and I want that my followers know that what I publish is based on my personal experience and where the probability of the price is going to, or is headed to, based on my trading system. I can be wrong, I'm not always right, okay? But I'm honest and I'm clear. I don't publish what you want to see, I publish what I see in the chart. And I flip to bearish and I flip bullish if the chart is telling me something, okay? I'm not trying to influence, or I'm not trying to manipulate my followers, because there's no point to do that. The point here is to learn, to trade, and then repeat the process, okay? So follow me on Twitter if you like this video and you want more content from me on a daily basis. And also you can find me on Instagram and on Rumble. So if you made it till the end of this video, I give you congratulations, because it was a long video. I hope you find a lot of alpha and a lot of value in this video. And as always, thank you for your time, and we see you in the next video.